Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I grabbed some stuff from Twitter. It's mainly uranium stuff. I've got an oil one in there as well. I want to talk about energy and maybe even shipping and how that ties to energy. I've just been kind of thinking crazy things recently and lately, and I'll try to get into that throughout this video clip. So we're going to start with uranium, work our way to oil. I only have one oil thing on here, and then I'm going to talk about perhaps shipping. So let's dive in here. I'll take a look. It says Goldman Sachs, uranium. It says this message was sent from outside the company. Yeah, don't send it outside the company. It says, I thought you might like to know that our investment strategy group came out this morning with a tactical long position in spot uranium. The form of uranium we recommend gaining exposure to is U3O8 or uranium oxide and is the raw form of nuclear fuel before it is processed for use in civil nuclear reactors. It is not related to weapons grade enriched uranium. It has high expected volatility of around 40 or 50%. So it looks like Goldman Sachs is aiming in on uranium. John Quakes, John. Raymond James analyst Brian MacArthur has raised his uranium price forecast and raised his price targets. Obviously, he's got Camco outperform, Denison Mines outperform, and NextGen outperform, and he's raising his price targets from 34 to 40 for Camco, 260 to 280 for Denison Mines, and $9 to $10 for NextGen. Uranium Corgi, he says government Sachs recommending uranium while a bill to ban Russian uranium is making its way through the Senate. Very bullish. Seems that way. Looking at Brandon Monroe, he's put Sput is stacking 1 million pounds of uranium per week in 2022. Gets really interesting if you extrapolate that average out to December. And here it says they're adding 11.5 million pounds of physical uranium is what they've added so far in 2022. Looking at uranium, Frank says, my forecast for energy fuels is $20 at the end of April, $60 at the end of the year, and $200 at the end of 2023. What do you think? And you know what? Put in the comments section what you guys think you will be during that time frame. I'd like to hear your guys' opinion, but that's what Frank thinks. I don't really have an opinion. I just think it's going to go higher. Over here on the left, it says, I love it when I hear uranium mentioned on TV. This was Making Money with Charles Payne. And they had uranium prices on there on TV. Looking at John Quakes, the Twitter analytics data on uranium interest is unbelievable. 3.14 million profile visits in just the past 28 days. I've never have I seen this level of interest in uranium and pound nuclear energy space. Lots of interest in uranium, given his Twitter account. Derek says, breaking uranium. Uranium could be added to the U.S. critical minerals list soon. A hearing is next week. I go over that big news here. Most U.S. investors are off Twitter this evening, so it's for the Australian uranium investors. It's coming up to this side over here. We've got another one. We've got the Livermore bullish cylinder start of something big that's coming. For energy fuels, I threw that in there. Lots of volume kicking on the right-hand side. Looks like it wants to break at any second. We'll see when that breaks. We'll watch it on our daily technical analysis. What else I threw in here was top oil traders see oil topping at $200 by end of 2022. A number of big oil traders now predict crude to trade at more than $200 a barrel by the end of 2022. Doug King, the chairman of RCMA Group, even sees crude at $250 by year's end. Most $200 oil predictions are factoring a significant loss of supply from Russia. And I agree. I think 150 to 250 is what I've got the number at. I don't know what it's going to end up at, but that's where my number is. Now, I was looking at the Baltic Dry Index. So we've got all these. And let me come back in here real quick. I was kind of thinking about some things, and I was kind of getting into it. Just thoughts. We've got oil that's probably going to moonshot. That's going to happen this year and next year. We've got natural gas that's moonshot over in Europe. It's very high over in Asia. We've got very high natural gas prices, very high coal prices, in that region as well. We're seeing a little bit of a movement in natural gas, and we're starting to break out for natural gas here just recently. I'm going to go to natural gas and show you that chart of the breakout real quick. Obviously, I had to blow right through past it. Here's natural gas futures. We've broken the big trend line to the upside. It consolidates. That happens a lot of the time. And now we're breaking that consolidation pattern on the upside for natural gas. This, to me, looks very bullish, irrespective of what happens the next trading session. This is broken out. Looks like it wants to run higher. So this is natural gas futures. So when I look at all of this, I look at the price of coal, I look at the price of natural gas, I look at the price of oil, and they're all looking like they're just going to moonshot here this next, 2022, 2023, next months, next year, however you want to say it. Now, if moving things becomes very expensive, what do you think is going to happen? We're going to start shipping things less by air and shipping things more by sea. It's going to be rail and sea. We're going to do less trucking, less flying of airplanes. I would guess, if we get prices that high because of the cost. And if that's the case, shipping, I think, is going to do incredibly well. And if you're a part of the channel, the Finding Value website's down there. I've got all my shipping picks on the website. If you're a platinum member, you can see all of them. I've got it all charted out. Some of them are a thing of beauty. They are looking very well. Now, what I'm going to cover here is the Baltic Dry Index. The Baltic Dry Index is this guy here. So this is the Baltic Dry Index. We are sitting on this resistance support line. So it's resistance support, resistance if you're bouncing from the bottom, support when you're coming on back like we have recently. This is acting as support to bounce higher. I think that the Baltic Dry Index, taken off log, looks very good over here. With the way that oil's looking, with natural gas, with all coal, the cost to move things is going to get incredibly expensive. So I think, I was just looking at the Baltic Dry Index. Anything that's shipped, bulk cargo or whatever, I think is going to go up. Now, I'm not an expert in this field. I'm not an expert in this area, but it looks like I was trying to do some analysis on the Baltic Dry Index. And looking at the last bull market, I was looking at it with Scott on Twitter. We were looking at this stuff, and I'm just looking at this going, man, this has a lot of crazy variation. So what I do when I evaluate these things is I look for opportunities. I look to see, what does crude look like in comparison to the Baltic Dry Index. So these are the two overlaid. Depending on where you start, it really highly depends on how this chart behaves. But it looks like they are very close in terms of their ability to move. So if you were to look from like bottom to top on a lot of these, they move very close in the movements. But the Baltic Dry Index does move very fast, very quickly. I think it's even faster than oil. Because when you tie these things down, it just goes vertical. And I think we're right at support. So, if oil goes pretty crazy, we'll say this year and into next year, and natural gas goes crazy and all these energy costs go skyrocketing, I think uranium is going to follow as well. But the Baltic Dry Index might be something to watch, and the shipping companies, because I think they're incredibly good right now, incredibly good. And if you guys want to know which ones those are, and you're a member on the Finding Value website, I put them all in a single thing under dry bulk shipping. And the charts all look incredibly good. So there's that going on. Looking at some of the other ones, potash has really had a big run. I don't know if I'd be jumping into those at the moment. It could still run further. I get it, but they've already had pretty big runs. And graphite's looking pretty good. They're down. I think those look decent. I'm just going sector by sector. Oil looks like it wants to go higher at some point here, hopefully soon. Inventories are getting eaten up. I think we've got a long runway ahead of us this summer, and I think we could easily move to pretty high levels. Natural gas, I think, looks like a great opportunity. Natural gas looks like a very good opportunity. That's another one that I have my eye on. And then agriculture, anything with agriculture looks good. Shipping looks good. The tankers are turning around. They look pretty good. They look good all over the place. So I'm looking at all these sectors. I'm trying to figure out what is the best for my money. Value-wise, the shipping companies are very good. Looking at the oil companies, their value is still pretty good too, but we've already had a pretty big run in oil. Natural gas looks like it's just starting to heat up. That could have a very big move ahead of it. And uranium itself also looks very well positioned. If I were to go over some of the uranium ratios, I was looking at some of the uranium ratios, and I can go over those. I was seeing some crazy stuff. So this is the uranium to, I think it's uranium to silver ratio. Let me get the crude out of here. This is the uranium to silver ratio. This thing looks like uranium wants to outperform silver, like we're going to see a moonshot in uranium. Another one that I was looking at is the uranium to SPX, which is the S&P 500. Momentum's coming down sideways, and then I think it's about to break to the upside where uranium just takes off. So that one looks really good. Then we've got uranium to gold ratio. It looks like uranium's already taking off in relationship to gold in this area coming up. And then we've got uranium to crude oil, which is still cheap for uranium. You can see last bull market, 07, it got really cheap, and then all of a sudden it just blew to the upside. And we go all the way to 2.2. It's at 0.5. So that's a about 5 times as much, 4.5 time move where uranium could outperform oil. And what I'm saying here is profound. Because just take this in for a second. What I'm saying is uranium could outperform oil by 4.5 times, while oil is going to the moon. Think about that for a second. And when silver's increasing, uranium might just run right by it or in front of it and just take off. So uranium, when you price it in terms of ratios, in terms of other assets, is very cheap and has a lot of leverage and can move quite dramatically, I think, very soon. So there's a lot of really good opportunities. I want to talk about all these opportunities. I'm going to do a website. On my website, I'm doing a Zoom call for all my members on the Platinum membership. We are going to get into this. We are going to talk about it. We're going to talk about the opportunities in these areas, what I might be doing, how I might be positioning money and whatnot. These opportunities don't come often in people's lives. And the opportunities here are just massive. And I'm watching the ratios. I'm looking at the companies. I'm using absolutely everything at my fingertips that I know, that I've been in the markets for 18 years to find good, solid companies for this commodity bull market that is in progress, and that some are just starting their progress. Some of the companies, they are lagging. There's some sectors that are lagging other sectors. So I'm trying to position myself out. I'm really trying to think about how to play all this, where to put my money, where do I have the most leverage? Should I do options? Should I do warrants? Should I not do that? It gets very very difficult. I usually don't like doing options and having a shorter time frame, because that time frame costs me money. But if the opportunity is there, maybe I'll decide. I haven't decided on that one yet. Rare earth metals is looking very good. That one is doing well. Lithium looks like it's getting its butt moving. And remember, there's going to be tertiary effects of high energy costs, especially oil. I do think very high oil prices will be a jolt to sales of electric vehicles, but that will also be an increase of demand on the minerals that there are. So everything I'm kind of thinking of is, if it costs a lot of money to move things, where do you go? Shipping, rail, all those types of things. And then people will find alternatives, I think, to electric vehicles, but that's going to strain our entire mineral supply base. So that's also a huge, incredible bet there. And I also think anything held physical metals will become ultra valuable because the cost to get them out of the ground is going to be a lot more, and those cost curves will go up. So it's going to be very interesting. Very interesting how all this plays out. I'm not a lot in the mining companies. I really chose the royalty companies to play this with. So that's kind of how I'm playing it. Mining companies in uranium, but that's an energy company that's about to, I think, have uranium go up quite a lot. I'll stop it there, guys. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.